At this moment, Scott, within this uncertainty from a macro perspective, do you want to be buying into some of this weakness in tech?
Hey, Caroline. I think you actually do. I mean, I think this is one place where you can start putting some money to work and some new money to work. Probably got to be a little careful. As you guys were just talking about, it's probably not the time for the chips because of all the tariff uncertainty. But something more like an equal weight sort of tech play. Catch on the themes with AI. Like if you remember, the starting place before all the tariff stuff, we were all talking about AI still because it was still a really big deal. It will continue to be a big deal. It's just being overshadowed currently. And so, this is probably a pretty good time to start putting money to work towards that sector and towards that theme.
Okay, but if it's not chips, how are you thinking about the AI opportunity?
Yeah, look, I think it's a little bit more nuanced right now. This is, you can think about the AI trade as being, or the AI investments broadly as following a couple of different phases. We've been in mostly the sort of the infrastructure phase, and that's dominated obviously by chips, by the hardware kinds of things. Just like routers dominated the first part of the internet cycle, we're getting now into more of the prove it stage of the AI, which is where where companies are going to have to figure out and prove to the market that, hey, I'm using this stuff. I know how to make it. I know how to use it in my company to drive productivity, drive processes, and to get higher margins ultimately, which is really the name of the game for this. And so finding those companies that can help deliver that type of margin expansion through productivity growth using AI is what we think is kind of the next trade. And so that's why that more equal weight treatment we think is probably a better play.
When we think about this week, though, Scott, and the amount of guidance we might get from earnings, from CEOs, whether it's the telecom sector that comes thick and fast, whether you've got some of those chip names, whether it's Intel or Texas Instruments, are you expecting the guidance to be lower?
We expect the guidance to be completely fuzzy. Look, I'm not sure who's going to believe guidance. We had United Airlines come out, last week and say, look, here's our guidance for a recession. Here's our guidance for non-recession. Like, that's not guidance. I mean, that's actually, it's just fairly useless. And so, what we're really going to be focusing on is how are companies thinking about operating? So, in terms of the guidance, the numbers aren't really going to mean anything. Nobody's going to believe them. But in terms of philosophically, how are you operating in this environment through this uncertainty? How are you thinking about Capex? What sort of contingency plans do you have in place? It's really going to be those types of things that people are going to be looking for. It's going to be a kind of a tip of the cap towards good management. Good management and thoughtful management will probably get a premium through this kind of cycle.
Yeah.
But it's going to be really those types of more squishy qualitative things that folks are going to be looking for rather than focusing on the hard numbers this quarter.
Let's go to the squishy Capex then, Scott, because what are you expecting in terms of companies' commitment to continue to spend? We're all questioning it from, the hyperscalers when it comes to NVIDIA investment, for example.
I think it's going to be a time scale type of argument. So, I don't think nobody's very confident in the next few months. Nobody has any visibility into what these policies are actually going to look like, what these tariffs are actually going to look like. What we're really focusing on is what are folks thinking about for the next 2 to 3 years, and are they actually are they going to start executing on some of those plans? So, again, it's just a tip towards the management, towards the guide, towards teams that are proven that they can think through some of the short-term issues, manage through some of the short-term issues, and really focus more on the medium-term stuff that will, that can have the benefits accrue to them through time. It's, again, it's not going to be an easy charge. I mean, this is not going to be an easy earnings season to figure out and sort of bottom line for folks. It's really going to be kind of a company-by-company, hand-to-hand battle.
What about global exposure versus domestic exposure? I think of the telecoms names, and they've weathered relatively resiliently because they're focused on a consumer here in the US. How do you think about opportunities to invest abroad or companies that have exposure abroad right now, Scott?
Yeah, I mean, look, if you're thinking about investing abroad, it's really about two things right now for us. One is, we do think the dollar downtrend is going to be fairly strong and fairly persistent for the next couple of years. That in and of itself gives you a pretty good tailwind if you're an international investor or investing in international equities. So that's a starting place, and so you got to get the dollar part right for that. And we do think that dollar trend is lower. The other thing, though, is importantly, the fiscal expansion, the kind of fiscal thrust is now the realm of internationals, not the realm of the United States, companies or United States governments. Sorry. And the market definitely rewards fiscal expansion. We saw that through COVID. We've seen that over the last 10 years, really. And so, the sort of the dual thing of fiscal expansion internationally versus the U.S. And the dollar trending lower against most major trading partners, we think those two tailwinds are going to, really be to the benefit of international equity investing for the next probably year or so.
Most major trading partners, I don't know if you count China as one of them anymore, Scott, but what about China's investment the fiscal stimulus and whether or not you want to be in some of these Chinese internet names, for example?
Yeah, Caroline, that's obviously a pretty tricky one. China, we think it's kind of getting bullied, just like Europe is kind of getting bullied into doing the fiscal expansion thing. We think China's going to get bullied a little bit by Trump into doing sort of counter-cyclical fiscal expansion, counter-cyclical policies, which they've really been resistant to for the last couple of years. One thing that we think is pretty important, especially for Chinese tech, though, is Premier Xi. He's dropped the common prosperity language. We've not heard common prosperity come out of his mouth or in written form for many months now. And that when that common prosperity language started to take hold, it was really the death knell towards Chinese equities and Chinese tech in particular. And so that language being dropped, we think, is important. And so the combination of that language being dropped, so he's signaling a change, change in his mindset towards capitalism, changes his mindset towards those Chinese tech companies. Plus, what we think is going to have to be some sort of fiscal counter-cyclical response by the Chinese governments. Makes those probably okay to invest in, but man, that is a tricky one.